the line with Nic Chahine. He's an options expert. He joins the show every Tuesday to discuss this week's options outlook. Also, the creator of a Marketfy product, Create Income with Option Spread. So, Nick, you're usually pretty good on your overall market and macro calls here. Coming into triple witch expiration, what are you looking for?
I'm looking for, we've been playing the range. We have been range bound, but now the energy to explode up or down is more down to the downside than the upside. For the last few weeks, we had more potential upside explosion, especially in the small caps. You know, we were looking so bullish. We were reaching with a 1300 on the RUT and the IWM especially. And then now suddenly everybody's preparing for the whoosh down. And, the SPY chart looks a little scary if we lose at 207.50 or so. So I don't blame them for thinking that. But until that happens, I'm continuing to do selling the iron condors and just the range bound and creating not on everything, but wherever I see levels that I can sell against. And, even as easy as doing the SPYs every week, most traders can do that with just a little knowledge and a lot of homework on what levels to expect. And I can also, there's a question that comes up, like Dennis, I think you earlier said you had winning positions in AIG, I think. Yeah. I'm sure a lot of your listeners have the same question about their stocks, or tickers, I should say, as well. And what you can do is, you said that you would sell it and regret it to book the profits, or you'd sell half. Why not do some stock replacement strategies here and there? And those are easy, where you cash in your profits and re-engage with a cheap call strategy. So even like a cheap call spread out in time, wherever level. Yeah, because then you don't regret it. You book your profits, and you just if you were
use
wrong,
some of the profits to still participate in the potential upside.
Yeah, so if I had $2,000 of profits in one stock, I would book it and then re-engage with a couple of $100 on some calls, which give me more upside potential. Another way you can do it, if it's worth it, depends on the ticker. You could sell some upside calls against, not naked, against the asset you're holding.
Covered call positions.
Yeah, covered call, and this gives you some income while you wait. And if it drops a little bit, it gives you a little time to sell as if you sold it, earlier in time. So. But the stock replacement strategies work best, in my opinion, for me when I'm iffy. Anytime I'm iffy on the price. Here's the thing. Every time I'm wondering if I should book profits or not, I book profits, because what's the worst case scenario? They go away
fast. Yeah.
Right. What's the worst case scenario? Oh, I miss out on some more upside. Meanwhile, I booked my profits. How can I go wrong with that?
Yeah, it's a good point there. I like that stock replacement strategy. That's something I didn't consider in the past, where you move the profits and the equity position into a potential option position. So thanks, Nick. That's a good suggestion there.
No problem. And then especially like a couple of days ago when the VIX whooshed down close to 12 again, I mean, in theory, options are cheaper to buy at that point, in theory. So, that would have been a good time to do that. Everybody was exuberant and the prices were up and away. So the macro call for me has not changed. We have room to creep up. We're going to have some tough days here and there, and there's going to be a catalyst to take us out of this range, either upside or downside. And recently, it's more the catalyst down. We're all scared about Greece, and you hear people say, okay, it's not a big deal. It's going to be a big deal, even if it's just temporary. I mean, otherwise, why worry about it at all if there's not going to be a big deal? But we can't predict what's going to happen. I mean, you're going to have experts that are going to follow me on the show today and all week, and they all have an opinion as to what's going to happen. I can tell you it's beyond my pay grade to know what's the Greek default going to mean for the global economy. I don't know where the chain ends. I don't know what touches what. We didn't know it during whenever we blew up the last time. So who's to say that there's not going to be carnage? I don't know. So I get prepared, and I don't overly commit one way or another. That's why the range-bound trade is working fine, and I set my losses to be finite. This way I know if it hits the fan this way or that way, I know I'm going to lose this much or that much, and I'm okay with both numbers. Therefore, I can sleep well.
So are you still playing this range here then, Nick? Because obviously this
Yeah.
S&P futures, I mean, we look at this thing and 3, 4 days ago, everybody's like starting to get a little bit bullish again. But we were right back up there at resistance, 2105, 2110, 2115. And it takes 3 or 4 days, a couple bad news headlines out of Greece, and we're right back down at support here. So I guess you just
Yeah.
keep playing this range until it doesn't work, right?
Yeah, exactly. But you have to play it in a smart way and not overly commit one way or another. So you have to pick your spots. And otherwise, I was lucky enough to build a lot of short positions via credit call spreads that are out in time and way up in level. So I left myself buffers in time and distance. Distance from current prices at the time whenever I opened, and time. So if I'm wrong, I have time to change my mind. And then as markets drop and I say, okay, this drop was on nothing, was just on like a fizzled out relief rally of sorts, then I pick and choose some credit put spreads against those the shorts that I have that are long distance, and that's returned close to 20% already on what I've got in the pipeline, and we're not even done through half the year. And these are so boring trades that I'm almost embarrassed to book the profit. Almost, not quite.
Hey.
So it is easy enough if you stick to your basics and you don't break your rules. It is so tempting to fight it every week. Like this week, it is so tempting to fight the credit put spreads and credit call spreads because, oh my gosh, I can make this much in 1 week. Yeah, but this is the 1 week where you can get blown out one way or another. And so it's not the week to pick a fight because of all these made up, we have like milestones. So the 18th, Greece needs to deliver a deal. And now apparently maybe it doesn't. And then you've got the Fed event. Oh my gosh, would they not? So for this week, it's got the potential to be violent, especially with the Fed event. I say that they can raise rates and cause a debacle downwards. They can give us that's one extreme. The other extreme is they can come out and say, you see the transition into the Fed here? Did you notice? No. Okay. The other extreme would be the smooth. Yeah. The other extreme would be for them to give us a date that it's not going to happen, like in March when she said we're not raising rates in April and we're going to end like 100 points and whatever in the S&P, I think. So I don't think she's going to do it either. They might say nothing almost and kind of keep us guessing, and that's probably the best thing to do because then it diffuses the expectations. So I'm still thinking, okay, maybe December. You're thinking September. Some people still hoping for 2016, so there won't be any extreme moves because I don't think they want to cause any ripples up or down. That's my opinion. So, but it's still violent potentially.
All right, let's move on to some individual issues here. And I guess you came in, we were talking about Twitter here. CO resigns, gets the pop, and then just has got annihilated. Lost 6 points from there. We've talked about this stock with you time to time on the show, Nick. Any opinions here at the 34.30 level in Twitter?
Yep. Last time it got hammered, I took some credit put spreads that were winners. And so yesterday I took some call verticals long on a hunch. And I gave myself time. I went out to September and I just bought 38 calls and just, almost random, but not really. I just wanted to capture and move up. I saw what Kramer had to say about it yesterday. And I like what he was trying to say. He was trying to tick them off, I think, and kind of shake them up thinking, wake up. But I really don't care because every time I've come here or every time we talk about Twitter, I tell you, someone will figure it out. It's too good an asset to let it die. If the stock market will start beating it up, it'll be cheap enough for somebody to pick it up and or partner up with somebody. So as an asset, I don't think the world wants it to go away. I mean, I use it as my main source of information. I don't listen to news anymore. Everything hits Twitter first before anything else. So why would I want to bother? If it goes away, I will have to go back to the older ways of having to follow this and that and this and that and keep looking at this and that and this and that. So it's a valuable asset, and somebody will figure it out. So I took a long shot on it, long distance, without having to sweat the short distance.
Okay. All right. You always have a good perspective on Apple here. Could you just give a take on that. I was noticing yesterday, and it was kind of quick. I was like to, with it being the biggest component in the S&P 500, when the SPOOs are at a level, I like to see where it was trading at according to that level. The SPOOs last week, you got down to that 2061 level. And then lo and behold, you got Apple came down to under 126, 125.71. Didn't quite get there yesterday. How's the option market interpreting Apple, especially big week here with Quad Witch?
Apple, I think, did an incredible job yesterday keeping everything calm. I mean, like you said, it is a heavyweight everywhere in the indices except in the small caps, but it affects the small caps psychologically, I think. But it played a leadership role, meaning it outperformed most of the day. So when the indices were just wanting to whoosh down, Apple's outperformance kind of like kept them in check a little bit. It served as a prop. This morning, it's doing the same thing. So it needed to step up as a leader. And I said that last week, and it didn't do it last week. It did it more this week. And, the indices have that to thank it. As far as the options trade, they are all over the map. You can find anything you want and interpret it any you want. I think it's still centered around interest of 125, where it's going to be kind of a magnet at 125, and then it can pass it over to 130. But it's more resistive than supportive at 130. And then you have the extremes that are expecting way lower prices and way higher prices to even 135. So if we get a Greek deal, you can see it run to 130 and then get some pressure up there to slow down. But there are some overly exuberant folks out there. So Apple long term should be higher. So if I can't risk money on Apple, I shouldn't be investing in anything because there are no Apple-centric issues at this point in time. When it fell out of grace, everybody was nitpicking on shrinking margins, or I can't remember whatever else. Oh, not paying dividend or something like that. But there are no issues. I mean, everything they make, they sell out of. The people that buy their stuff are fanatics, and they cuss me out whenever I say, "Oh, PCs are not that bad." And the Samsung phones are pretty great, and they call them trash. So you can't fight a company a ball that's running this well. And so if markets hold up, Apple will be higher. So if you want to bet long on the markets, why not you can pick long on Apple.
A stock that's really been in a range bound, probably because the S&P futures have been range bound as well. We haven't talked about this one with you for a while. Is Google. Looking at GOOGL, if you want to look at that one, we always got to pick which one we want to look at, which is annoying to me. But 540 to 560, this thing has just been stuck in this trading range here. What are your thoughts on Google? And is this one you're playing? Maybe this is one that works when you're writing your credit call spreads.
It's been a perfect premium generator in iron condors here on Google, because it has had a while of just stuck, like you said, and this week is no different. The GOOL is stuck at 550 with regards to as far as having a magnet for this week's expirations, and resistance above and some support below. So yesterday somebody asked me, can it get to 500? Not on its own. If the market's correct, without a new headline, Google shouldn't get to 500 to answer that person's question. But yeah, it is stuck in the mud, and iron condors have worked this whole time on it. I did a couple. I recommended a couple, and they all worked, and they all have been hassle-free. However, it has headlines that keep popping up. Oh, it's buying this. Oh, it's buying that. But the price don't show it in either this or that. So somebody's crying wolf, or does somebody smell something, and if something is coming down the pipe. So whenever I do this many iron condors that are successful, I back away sometimes because it can't be that easy. You know what I mean? So yes, the options market's still expecting a range-bound trade in Google, and I think it'll go by way the market.
Okay, let's just take a look here. Just one or two more issues here. Gap stores closing a large amount of stores. Big write-off here. I guess you just have to give us a look at it. I know this is not one that's really on your trade list, but just looking at the chart here, give us your technical outlook here for Gap stores.
Gap is a violent stock. I'm looking at it. I mean, chop, chop, chop. Gap's here. A lot of Gap in the chart itself if you look at the 2-year one, and even at the 1-year. But I just don't like. I'm going to speak about it fundamentally. I think they mismanage their pricing. I mean, their quality is not that great, and it's not bad. They're hippie, like as in hip, not hippies. But they seem to come out with pricing that is somewhat aggressive and then high, and then they discount everything to like nothing. Oh, blowout, say a $5 T-shirt or whatever. So it's just I don't get the pricing strategy. The stock is untradeable in my opinion, not for me. I mean,
Okay, all right. We've been on the line with Nic Chahine. He's an option expert. He's a Marketfy Maven, author of Create Income with Option Spreads. Nic, thanks a lot for your take on the market, and looking forward to speaking to you again next Tuesday.
thank you guys, appreciate it.
Thanks, Nick.